Greetings, everybody. This is Jeff Scott, and it is, well, it's still the 4th, but by the time you see this, it'll be April 5th. I'm recording this late Saturday night in the East Coast. What a week it's been. What a number of weeks. Just a reminder of something I brought up last week. When you go to YouTube, if you download this on YouTube, remember what I said last week. Hold on, I'll give this a second. And what I said last week was to, first of all, go into this little gear and make sure that your quality is as high as it can go. They have a 4K spot, the 2160p, which will match up what I'm doing. And so that'll help to increase the quality. It may take a while for it to load up here. You also want to hit subscribe to like. I've already liked this, which would be by clicking on the finger if you like my presentation. And also there's a red subscribe button here somewhere around this area. Hit subscribe. I really would appreciate that. I spend a lot of work doing this, and if I want you to get the most out of it, and you want to watch it in the highest definition. The other thing I said last time was I also have a Dropbox file that I include, and that's really the place to get the highest definition, and you can download to that to your computer. This is the world we live in, and I think it's fair to say that the markets will do what the markets will do, and the markets are going to do what coronavirus does. And when you look at, let me see if I get this way I wanted to look at. I got a lot of things open. Whenever I do that, it slows down the computer quite a bit. When you look at where we are, I'm still a little bit trying to figure out why there's so little in Russia, probably related to the travel, although if you wanted to be a conspiracy theory person, you could say if you were the Kremlin and if you could get China sick, NATO sick, and the U.S. sick, you can have world domination, but I doubt that's what's going on. But, like I said, conspiracy. The Southern Hemisphere has cases. They just have a lot less. If you look at the active cases, you could see that China has cleaned up quite a bit, and we are, like Europe, the hot spot. So I do really think that the news is going to really dominate what we see in the market, and 1.2 million, this thing will be 1.220 by the time I get finished. It's just frightening how this is going. So I think that really, as a physician, who I missed this in the beginning, I believed some of the early stuff about it being like the flu. Still, if you look at the number of deaths compared to the flu, it's very small. Even if we have, if we end up with 200,000 deaths, that won't be the case. But this turns out to be a bad thing, and it's really impacted on my view of the market and where I think it's going. So I titled today, "Is a retest of lows inevitable?" And I would answer that, I think, yes. There's my email address if you'd like to comment on anything. As always, this is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I've paid for every tool that I use, and trading involves risk, and you alone are solely responsible for any decisions you make. I do like to call out my influences. I started with canceling. I'm improved by Morales and Catcher, really improved for me by Ian Woodward. Ron Brown, his partner in crime. John Person, who's got some great indicators, but he's also a great teacher, mentor, friend, and really taught me how to trade. Van Tharp, position size money management. Cigar with Superior Profit. His Q tools are outstanding. And recently passed away my buddy George Lee. The email address for HGSI, or the website rather, is highgrowthstock.com. Again, I get no financial consideration if you buy something here. Free 30-day trial, and under investing strategies, you can find many movies by me, Ron Brown, and others. Stock patterns are cyclical. We are clearly in a stage 4 sell-off. We'll talk more about this later. The question is, when is it going to end and the market turn up? Is it going to be a V bottom, or is it going to be some kind of a complicated W? or multiple W's, and I'm going to go on the complicated bottom, not a simple V. Growth stocks may go up like rockets, but they fall like rocks. So if I'm down here, what does it mean? It means I'm doing bear call spreads. It means I'm selling the call close and buying a call above it to protect me. I might be buying puts. I might be selling calls naked. I might be shorting stock. I might be contra ETFs. I've also raised cash, have less positions and smaller positions as well. If we look at Friday, the winners were consumer staples. You know, I never had a buy list that had Campbell's Soup, and you know, I could have put Hormel and others on it. I have several consumer staples on it because that's what's working. And if you think about it, you want to make sure you buy companies that can survive the downturn, that are still going to be utilized even if the economy comes to a halt. And all you have to do is go to your local grocery store to see what's happening to Kellogg's and others. If we look at the major markets, and you know, spoiler alert, I maybe got one or two stocks that I'm going to show you that are buyable, but for the most part, you got to be very careful in this market. Let's just very quickly go through, make sure I'm on the daily. I am. Futures. So as we look at this, we can clearly see the market topped here. We've had a vicious sell-off, put in a low. We had a big rally. I know some people got very excited thinking that the market's going to rebound, kind of like it did in December, Christmas Day rally of 2018 going into 2019. But we pulled back, and right now there's a bear wedge, and we're breaking down below it as far as I'm concerned. So I look at this as a not a bullish pattern on the chart. We had a sell signal come in from John here. We had a cross of the 50 over the 200, which is a bearish development as well. You'll notice that this run up here has been on lower volume than the pullback. So I don't see anything to be bullish about this chart. If I look at the NASDAQ futures, we're going a little bit more sideways. They behaved a little bit better last week. But again, look at the volume down here, okay, and compare that with the volume on the big pullback, much lower volume. If I look at the Dow futures, same story, bear wedge, pulling back, sell signal. Now the Russell is probably the worst of the bunch, and we'll look at that on some of the HGSI charts and look at longer charts. It has never taken out its prior highs, even with a high up here and a similar pattern. Big move up, 20% recovery, and a sell-off. And again, volume bigger on the way down, although less obvious on this one. Now the VIX has come down, but it's still sitting here in the 40s. The VIX is still very elevated. All right, this is complacency. I know the saying is when the VIX is high, it's time to buy, but that's assuming the VIX is coming back. I think the VIX is still high and pointing out the volatility of the market. And you know, one safe haven has been going in cash, and the dollar has gotten strong over the last few days as well. If I go back to my charts, and we look at weeklies, it looks, you can see just on a longer term, but the same basic story that we just looked at. This is a tough market any way you play it, and I'm still bearish and expecting a retest. I like to look at certain things every week. I like to look at the 10-year and 30-year rates, and they're racing to the bottom, the lowest of all time. And at least the 10-year has taken out its prior low, which occurred, days ago, and the 30 is there as well. The AD lines in white turn down on the this is it's not the one I wanted, but it'll do. On the large stocks, now this was supposed to be the Russell 2000, but I showed you the wrong chart. But trust me, it's exactly the same. The AD lines have turned down with the markets on both the small stocks and the large stocks. And here you can see on the NYSE, the AD line is turned down, and the only ETF among the group listed here are the bonds TLT, which went up with rates falling. If we look at breadth, we can look at stocks above the 20 and 200-day moving average, stocks above the 40-day moving average. And you could see that we are down on the bottom with the green arrow, approaching or just above the 2008-2009 lows. If I look at the 3-month new high, new low, we are just above the 2008-9 lows, and a place where we typically see reversals. So we could reverse some this week as we get oversold. So I never want to count that out. And you can see on the VIX, the oscillator is now crossed back below zero. The summation index came off some record numbers here, but is still very low. And you can see on the weekly how record that is going back a number of years. If I look at the buckets, for those that are new to me, take the S&P 1500, put every stock's Bollinger Bands on with a midline. This tells me that in red, 73% of the stocks in the S&P 1500 are below the midline. And if I look here, you could see if you take between 0 and 100 of the Bollinger Bands, 0% to 100%, and divide them into 10% slices, that the majority of the slices are in the 30th and 40th percent area. So moving towards the midline. Why is this important? That doesn't tell me anything, to be honest. When I see, like we saw a couple weeks ago, when I get 30-40% of the stocks are less than zero, that tells me a reversal to the upside is coming. When I see 70-80 are greater than 1, probably a reversal to the downside. So that's a neutral signal. I wouldn't expect to see a Hindenburg when we're on the bottoms. But unfortunately, even though last week was only down about 2%, except for the Russell, which was down greater, the number of new lows is starting to creep up without the new highs following them. What I still don't understand, and I've been scratching my head, when I run the Woody indicator on Edge Radar and I look at market tone, and that what we're looking here is this band here of all green, it still shows bullish. And I'm scratching my head, because it's one of those rare times when I totally don't agree with that tone. And then perhaps the reason for this is this black and red are just the extreme volatility that we're seeing. It is what it is. Now, if I looked at sector strength using the Q tool, you could see on the top slice here, it looks at 1 day in magenta, 2 day in, I guess, purple, and 3 day in brown, and 5 day in brown. And you could see that the only thing that's above for all three are staples. And then with the big move up at the end of the week, both 1 and 2 day energy was positive. Everything else was negative. If I go down and I look at 30 days out or a month out in blue, you could see how bad this market has been, with real estate down 39%. I guess people are afraid they're not going to pay their lease payments. Then the people that own the buildings won't pay their mortgage. Materials 26, industrials 28, financials 32% down, energy 47 despite the bounce this week, discretionary 42, communications 23%. And you could see the 5-day return here and the 10-day return. The last week, the only thing that was positive was consumer staples at 1.28%. Energy pretty much flatline. Canaries in the coal mine, these are some of the FANG extended stocks. I know Priceline's called bookings. I fixed it in the chart. I didn't fix it in here. I've got a classic bear, rally, failure, breakdown. And is this going to new lows ahead? Person sell signal came in on that on Friday as well. No new news in earnings. I would say jobless claims will be interesting. On Thursday, there'll be a whopper. People are expecting us to end up at 12 or 13% unemployment or more before this is over. The FOMC minutes might be interesting as we hear what they were thinking about how they were going to save the market if it got into trouble, because they've certainly thrown the kitchen sink at it. Some of the others will be major movers typically, but I don't think anything's going to overshadow the coronavirus story. Yes, there's some stocks with earnings out this week, but this coming to the end of the earnings season. And boy, you figure you've got earnings and revenue of this quarter. Did you meet or beat? Then you got to give next earnings for the quarter and for the year in revenue. And everybody's saying we can't predict because of coronavirus. It's not been a whole lot of winners on the earnings story over the last couple of months. So my thoughts, we end the week lower as a Friday sell-off, ends a quiet and less volatile week. Small stocks underperform as the Russell ends down another 7%. You could see year to dates, the S&P is down 23%, the Dow 26%, the Russell, wow, 37%, and the NASDAQ, despite the rallies, is down almost 18%. COVID, economics slowdown taking a big toll on the economy. I mentioned unemployment. Many industries taking a pause. Retail, airlines, cruise ships, restaurants, hotels, casinos. We saw Whiting Petroleum go bankrupt. We saw Penn sell a casino to raise cash. It is a tough time out there. Now, when I look at the stimulus and the things that we've seen, they really should help protect the small business if they work and the individual. But I don't see how they're going to turn around those industries very quickly. And I don't think we've seen the economic downturn. And I don't see the market getting better until we start to see some good news on the coronavirus. Now, the government and the Fed have responded with historical large cuts and stimulus, more QE to stem the shutdown of the economy or to blunt the shutdown. They sort of caused it by telling it to shut down. Too early to tell, but help may be arriving too late, especially when lots of companies have started their layoffs weeks ago. Clearly, we are in the early stages of a recession. The question becomes whether or not the market has discounted a depression or not. I don't think they have yet. And my expectation is to retest at a minimum with no guarantee that we stop there. It's hard for me to be bullish here. Once again, caution is warranted. Take profits quickly and raise cash so you have ammo when the market clearly turns off. Now, old chart, do not fight the trend. On the left, we have a fairly classic uptrend. Now, the way I like to buy is I like to buy pullbacks to support. So kind of where the letter B is where I typically like to go long. But the other thing, probably the biggest thing to point out here is look at the time frame of the legs up compared to the time frame of the legs down in an uptrend. It's very difficult to get in or out and back in or short and cover in an uptrend, especially a fast-moving uptrend. We are in a downtrend. In a downtrend, you will get rip-roaring rallies. But just like in an uptrend, the primary trend direction is much easier to make money than the counter-trend rallies that we see. My strong argument here is that what we've seen since the original low was a run up to some element of resistance, happens to be the 38.26, whatever it is, percent Fibonacci number, and my expectation is we sell off. Do we stop at A, double bottom, and go back to new highs? Do we break down and go much further? Or do we bounce around and create sort of that L that people have talked about, which would kind of be a Darvas box between those two? Time will tell. The likelihood in my mind of us breaking above that line before some resolution of COVID-19, I don't see it. All right, I know I've just elevated everybody's mood. Probably not saying anything you haven't heard before or seen before. So You know, a lot of times I go into my trade station here and I talk about the markets. I'm going to look at just a couple of things here because I don't think I'm going to see anything here that's going to change my mind. Let's look at the S&P futures. You could see person sell signal came in pretty quickly. You could see these red dots represent some divergences, MACD divergences, and they can build up for quite some time before the market rolls over. But here's the weekly in a sell signal, the monthly in a sell signal. The daily bongo actually was green with the market moving up, but the weekly and the monthly bongo are red. I see nothing bullish on this chart. We're not below the envelope. We don't have these green dots building up, which we'd like to see before, and we may see before we recover. The NASDAQ will look similarly, almost identical, so not much more to say about that. If we look at the US dollar, we can see something looks different because the US dollar is strong. And you can see the dollar's got a new buy signal on each time frame. It's probably getting extended on the weekly, so at some point it'll probably pull back, but that's not to say it's not going to run up some more. And if the dollar's strong, you might think gold is weak, but with the market selling off, gold also has a buy signal that came in Friday, and we'll talk more about the metals. And let's just take a look at VXX. And you can see the VXX is sitting here in the mid 40s. It's red, it's got a sell signal, all the things that you'd want to see, hoping that it comes down. But notice the weekly bongo and monthly bongo are still red. It's still a buy signal on the weekly and a buy signal on the monthly. So right now the VIX is just a pullback in the setting of a larger uptrend. I think that will have a lot to do with predicting how this market will go. If I go into HGSI, open up my designer, go to Ron Brown's wonderful market analysis user groups, hit 01, hit warehouse, and then change it to top-down view. It's already there, perfect. I know it's hard to see this unless you're looking at this 4K. It's easier for me not to change all my settings and resize everything. I've had the people that have downloaded the Dropbox video have had positive things to say. So if you're not seeing this clearly, please download the Dropbox video. It won't bite, I promise. The strength in the market this week was U.S. oil, up 32% in the last 5 days off of ridiculously low levels. The dollar is strong, gas, TLT, gold. If all those things are strong, you could bet the market's weak. Small caps, mid caps, utilities, NYSE, IBD stocks, 1500, S&P 500, and notice they're all negative for both 1 day and 5 days. This is a weak market. To me, we are in a bear market, and to me the likelihood is the market has less resistance to going lower than going higher. So let's open up a couple of charts here. Let's take a look at these major markets. Now, I don't really need to go deep into each different one because frankly, they're going to look exactly the same. So I want to look at one major, I'll look at the S&P deeply, and then I want to go look at some longer term charts. Here we go. To the left is daily, to the right is weekly. You could see that the weekly bongo is red here, that we've had a massive sell-off. We don't need to go through percentages, we just looked at it. To me, we had a bearish wedge form here. And we broke down from it. You could put some lines here and say The good news on that rally is we broke off a trend line resistance, but we fell through this line here. To me, that's bearish. And my expectation is that this market is going to at least come down here and at least retest this area. And I have a question in my mind as to how far this market might go. So let's switch this to monthly charts. And let's go look at the Russell 2000 first. So the Russell 2000 is interestingly pulled all the way back to its 200 monthly moving average. This is the Russell, this is the IWM. So when we look at this, I'd like to pull out a couple of different levels here. The first level to point out, we're going to use the closing numbers. There you have your 2018 Christmas low. We blew through that. Then we have toward the top of the market in 2015. We blew through that. Oh, I hate when I do that. You have to remember you take your finger off the mouse before you take it off the shift key. You know, that would have been a good place to expect to stop. We have this save here. And this is the breakout in 2012. And then it became sort of the stopping area in 2015. I will figure this out in a second. All right. So let's say the Russell is done going down. The Russell has corrected. If it's done going down, %, before it bounced. And it fell, I'm just writing this because I have a tendency of forgetting. So it maxed at 45% down. And it got down to sort of the 2015 lows. Sort of the breakout from the 2012. My next stop for the Russell is here. And that gets me to the double top of 2010, 2011. And I'm going to me, that's an important area. Now, if I go down to that level, this would be a 51% fall in the Russell 2000. Now, let's look at these levels and see what that would look like on the S&P 500 and the Dow and the NASDAQ. If I go to the S&P 500, let's flip it to a monthly chart as well. If I take this thing here, I mean this in this area here would have been that 2019 end of 2018, 2019 low. Here's my next spot, which corresponds to where we are in 2016. Or do we really take a dive and drop down to here, which was the breakout from 2007, which we took out in 2012. Remember the pullback in the Russell was 51%. That's a 53% pullback. All right, the Russell had already pulled back 43% or something. To this point here, which seems inevitable to me, is a 38% pullback. So here's where we ended up. This is the double bottom if we pull back here. This has got to be one target, and this is my deep doo-doo we're in trouble target. This market can fall quite a bit. If I go to the Dow Jones Industrial, I mean, we're already here, dating back to 2014. We've already come down 38% before bouncing. I mean, where is this going to stop? This is where a double bottom is. I hate when I do that. I say it to myself 100 times. Hold the shift, hold the mouse, let go of the mouse, and then let go of the shift. If we go down there, 52%, all right? Look, I'm not trying to scare you. I'm not trying to play Mr. Bad Cop. We pull back to this point right here. This is a double bottom. It's still quite a ways to get back down there. 13% more. To get down to the bottom of this channel, the lower one, is 30% more. I think this market, I hate to be Mr. Bear, I think this market has a long way to fall. Potential. You draw the line wherever you want. If I go through the meat of the candles, we pull down to this 2018 low. This is the best performer. To me, is this the next stop? If we double bottom 11%, and then maybe we go up, or are we going all the way down here, which would be another 28%. I think that we can play with these numbers all day long. I don't claim to know everything. I'm not trying to tell you that I know what the market's going to do. I'm trying to tell you that there is a fairly good chance that at the minimum we are going to retest, and that there's no law that says that that retest is going to stop right there. And again, from where we are down to that level is another 11%. This is back on the S&P 500. The message to me that I want to give you is be careful. You don't want to be sitting at the end of this run and realize that you're out of money. Falling wedge, rising wedge, breakdown. You want to have cash left in your account so when we get this rally back to new highs, and that's going to be one hell of a rally, that you got money left to get there. So let's just put, what are the three road scenario? Well, the road that would be wonderful that I don't expect is for the market to wake up on Monday and say, all better, let's go to new highs. And of course, that would really mean a lot of this type of things. Nothing goes straight up. Okay. That would be wonderful. And if you think that's where we're going, I can probably have some property I'd like to sell you. The bear idea is going way down. And again, that will look like this. Well, there'll be, and then maybe a couple of these, but it's still going to go down. And then the neutral strategy may be very difficult to tell any different from the bear, and then it goes up or it goes down. What do you think the market's going to do? And if you're wrong, if I'm bearish and I'm plotting my account to protect me and to maintain my cash, and I'm wrong and the market starts to go up, I'll know very quickly, because one could argue, if I take out the high here, that, oh, I got to stop doing that, Jeffrey, that maybe I want to reevaluate, because that would suggest that we've got above that top of the prior move up. And that would mean I have a higher low and a higher high. But what am I going to lose there? That's a 3 or 4% move. I'd rather raise cash and be prepared to come back in than to try and fight the Fed, or the trend in this case, and end up with no money when the market turns. Words of caution from a person who's been on both sides of the card. If we look at industries, 2-day up. All right, what did I do wrong? Let me try this one more time. Although I think I got to go up here. All right, so if we look at 2-day up, we can see that there are 16 groups. If I look at 2-day down, there are 22 groups. Bearish leads bulls, but I would say relatively neutral. The problem is, let's look at what's in the bearish camp. Semis, utilities, medical devices, specialty pharma, steel, life sciences, wealth management, renewable energy, healthcare services, oil and gas services, chemicals, flow control. A lot of high growth stock names are in there. If I look at 5-day up, you could see that you've got 21 groups that are in a longer window are up, and we could pick up some of the defensive plays like tobacco moves up, and beverages and telecom carriers. If I look at 5-day down, you see the majority, which is 90. So what does that tell me? It tells me short term the market was kind of neutral. Last week was a 2% week down, but on a longer time frame, the market is still bearish. If I go and I look at the 2-day up, right click, change index group on expiration and production. This is what you're going to see in a lot of different industry groups. Is this a bottom coming in and time to buy? Are we going to have a bear wedge and we're going to come back? So this is Occidental Petroleum, and it's very similar to what you're going to see on a lot of energy stocks. It loses money. It says a 24% dividend. Well, we know what will happen there. It won't have the money to make the dividend, and it will get cut. And I have a hard time believing that, considering the price of oil, that these guys can be able to make their dividend. Apache, prior high flyer here, $6 stock, 18% dividend. My same comment applies to the dividend. Diamondback, all right, here's one that's making its move. Again, right now, I guess it's in a bear wedge. We'll see if it breaks out, goes higher, or if it falls back. Person market catcher does not give me convergence. It suggests it's anything more than a short-term blip. But it was the strongest one of the ones I saw. EOG. So why is this the number one group? It's not because the chart patterns are beautiful. It's the number one group because Force looks at price change and volume. And these things had pretty good price changes over the last 2 days. And they traded millions of shares. I looked through all of them earlier. The only one that I was interested in, it was tepid interest at best, is Diamondback, just because it's been a good player in the past, and I love its symbol, which is FANG. Gold. Gold actually behaved quite well the last few days, even with the strength of the dollar, and gold may be a safe haven. Remember, gold miners have not done as well as gold for some time. But you could see American Barracks, I own some of this, GOLD. Kirkland, it's had resistance at the 50, it's at the 50 again. I'm interested in Kirkland, all right? But for me to want to buy Kirkland, I'm going to have to see it break out above this 50-day moving average. Right now, that 50-day moving average is a blanket over it. AEM, lower in the pattern. Franco-Nevada, similar story. It's got to get above the 50 for me to have any interest in it. Nova Gold, a cheaper stock, did break and close above the 50. This might be another interesting one if you don't have any gold in your portfolio. Integrated oils, they have less likely of disappearing than some of the small American shale producers. They had their nice move up. Now, is this going to turn out to be a bear wedge, or is this the start of something bigger? Again, the person market catcher doesn't suggest that it's something different. 6.5% dividend. I think these guys, the stuff I heard on the news is they're committed to paying their dividends. Chevron, Suncor, I guess Sunoco 7.9%. Petrobras, Ecopetrol, I actually am playing some of this right now. But like the others, this has a 16% dividend if they can make it. You're not buying leaders, you're buying junk off the bottom. Large pharma, defensive plays for sure, have a dividend. And you'll notice a lot of the negative heat on biotech and pharma drug pricing. You haven't heard that lately because now we're dependent upon them. Look at the weekly person market catcher here, trending up with convergence with a falling price. That's a very bullish finding right there. Moving up, again, low in its pattern. Still a ways to go, pays a 4.3% dividend. J&J. Like to see it break above its 200. This is probably my favorite from a company perspective. They're a leader in cancer care, Bristol Myers. They're currently bringing in their acquisition of Celgene, which was a big deal. Broke above the 200, pays a 3.8% dividend. And similar to the Pfizer falling price, stronger person market catcher, often that goes with a reversal. So a couple things to like there. Packaged food. Now this is one that made me laugh because you want to see the best looking charts in the market. It's sort of a sideways move and pays a 3.5% dividend. I bet this is outperforming most of your portfolio. It's up since late February. It's not a great chart pattern. Probably continues to go sideways, maybe a little bit higher with a nice dividend. Campbell Soup. Pull back in an uptrend, break out above the 50. Is this the kind of things we live for? No, 2.8% dividend, but it's probably a safe place to be. It's not given up much since the market turned lower. Hershey. This one's fallen a little bit harder, 2.5% dividend. Kraft Heinz, 6.3% dividend. This one looks like it has its issues. Conagra Brands. Orville Reichenbacher, Hebrew National, had their hot dogs for lunch today. You really wanted to know that. 2.7% dividend. Yeah, it's come back some, But if you go back over the last 6 months, it's pretty steady. These are boring. I never talk about these. Mondelez pulled back too much for me. I look at these. Let's look at Kellogg. Breaking back above its 250-day moving average, pays a 3.6% dividend. Smucker's, sideways move, breaking out, pays a 3.1% dividend. You're looking for a place to hide during what could be another pullback. This is probably a safer place to be. Healthcare supplies. These are one of the companies involved in masks and gowns and personal protective gear. Every time there's a crisis like Ebola, they make a run. This one seems to be a sustainable crisis. Perhaps it runs more. I'm not against buying it down here. I certainly wouldn't want to own it when it's up there, unless I bought it lower. ResMed, they make CPAP machines. There's some talk about using their machines as ventilators if there's a shortage. They make money. They've got earnings, pay a small dividend. I think the story's kind of funny. I don't see them using these instead of ventilators, but what do I know? I'm a cancer doctor, not a critical care doctor. Don't know anything about this much further down in the pattern. Teleflex. Avidel is one I liked on the way up. It came down hard. Now it's sitting on its 50. What's missing here? Not that exciting, but clearly a stock in an uptrend, which is a rarity in this market. So I typically go through the top 10. Midstream oil and gas, talk about wondering if they'll survive with this price of oil down here. Here's Energy Transfer. These are billions of dollars of revenue. It makes some money, paying a 22% dividend. It's like buying a cheap call with a dividend, $5 a share. ONEOK, same pattern, 16%. Enbridge, 8%. Enterprise, 12%. Equitrans, 31%. TransCanada, 6.7%, at least that's moved up. Kinder Morgan, a big name, 7.5%. Again, these would be interesting plays if you like dividends. I just highly doubt these things will be able to sustain their dividends in the setting of the current marketplace. Generic pharma, these got a run because of the hydroxyquinoline and Z-Paks. I'm looking at this. I don't see anything that exciting. Here's Teva, Perrigo, Lanet, Dr. Reddy's. They were up for the week. That's why these things made it to the list, but I don't see anything here that gives me a chart pattern that is compelling. Food. I don't know anything about this industry group, which is Food Products Wholesale. This is an IPO. Bellring Blands. Anything that creates things that go to grocery stores. And can produce them will probably make money because go to the shelves at your local grocery store. They're empty. People are buying it. They're not eating out. I don't know anything about this company. It's an IPO. Simply Good Food. Not that exciting of a pattern. And this one hasn't done anything for a long time. So now we're back up to the... I'm not seeing a lot of beautiful things here, are you? We saw some in the metals, perhaps some in the pharmas. This is communications equipment. I mean, the 5G story is loud and clear. Juniper and Seago. Here's one that had a Bible gap up on Wednesday, trading above its 50. It held it. Person market catcher is supportive, but it had a lower low here. doesn't make any money, doesn't pay a dividend. It's certainly under accumulation. I wonder if it's in the 5G area, F5 networks. Again, I'm looking for patterns that I could grab. Audio codes, that's an interesting pattern, a breakout. One that's actually not failed in 3 or 4 days. Well, you know, you got that pattern. What is the pattern I'm talking about? I've got lower lows and higher person market catcher. Bullish convergence. The break, you know, you had a person buy signal here, which would have been an opportune time to take it. A break above there would have been fine. You're starting to get high on the high jump bar, but I would not be against watching this and seeing if this can take out its prior highs here. And that might be something interesting right there. Okay, I found something I liked. Audio codes. Add this to my buy list. All right, we'll continue on. These aren't getting better. So that's the top 10 groups. Mass merchants, just want to look at a couple things here. I do have a position in Walmart. Walmart, again, look at during the period of the market fall off market, Walmart's gone sideways. It reported good same-store sales last week, broke out on Friday, mobile breakout from a squeeze, a kahuna. Person is high, and you know, this to me is one of the companies that's likely to survive. It may be Amazon, Walmart, and a couple others. I like that. I own it. I'm glad I own it. At least I do right now. Dollar General also breaking out. Less quality company in my mind, but you know, that same basic pattern that I was talking about before. Lower lows, positive convergence here, and a breakout here. Dollar General, I think it's been on my list the last week or so. So I'd like to tell you that I found you some great stocks to buy that I'm highly confident they're going to go up. That's not this market. Shorts. I found a couple of things that I thought were interesting from a short perspective. I want to go back into my PowerPoint, so let me this is what I want to short. I'm not going to short this move down here to support because high likelihood it's going to bounce. I might want to take that short, but again, how do I know it's not going to bounce? Okay, at a lower high. This is where I want to short. I want to short my first return where what was support turns into resistance and a breakdown. That's what I'm going to look for. So let's go back. Let's look at a couple of stocks. In no specific order. Down. Bear wedge, potentially breaking down. Potentially breaking down. No guarantees. I'm not going to short it without a downtick. MasterCard, big pullback. Rally. Looks to me like it might be breaking down. MSCI, pullback. Rally up to what was prior support multiple times. and a failure. The problem with this one is I got the 200-day moving average where it might bounce. O'Reilly Automotive, boom, up to the 17 and a failure. SBA Communications, not yet, pullback, rally up to the 50, a failure will come down. Again, I worry about the 200 being support. How about Chipotle Mexican Grill? Pullback, rally, failure, breakdown from here. I might be interested in shorting that stock. Intuitive Surgical, pullback, run up here and failed. It's already BlackRock. Big pullback, rally, fail near that 200 and breakdown. That's the pattern I'd look for. I'd rather be looking at this real time and seeing that they're going in the right direction and the market hasn't gone up. But if I elect to go short, I might play with some of those. Now, I'm sure not everybody wants to go short. And in your 401k, you probably can't go short, so you might look at some of these. Let me go into my buy watch list. And in my buy watch list, you will see that there were some biotech I liked. Look at very quickly. Gilead, it's certainly not a clean, but looks like it's breaking out here. It's got a COVID-19 drug. Insight, have to get above the 200, but it's had a big move up here, and notice the PMC convergence. Novavax, another company with a breaking out with a COVID-19 story. Regeneron, probably one of the best performers in this market since the sell-off began. Remember, the sell-off began in this area, and look at where the stock has gone. Breaking out towards new highs. Repligen, old-time friend, pullback, broke above the 50. So there are some things I like. In the expiration, we already looked at ConocoPhillips and Diamondback. I showed you Alpha Pro and ResMed. If I had to buy technology stock, I liked Akamai here. Broke above the 50 mobile breakout from a squeeze in a person buy signal. And again, pullback, but bullish convergence on the person market catcher. The next one is probably, if I had to work something up for a buy, it would probably be Virtue Financials. Why do I like Virtue? Well, the first thing is, right up here it tells me that person weekly high close doji. Okay, so here's the close, here's the prior doji. That's a very bullish signal. It had a person buy signal come in on Friday. It had a kahuna and a mobile breakout from the squeeze. It's clearly in an uptrend and it's not extended. And both the weekly and the daily bongo are green. I like all of that. If I flip into my TradeStation platform and I look up Virtue, that's Walmart. Okay, wrong one. All right, if I look up Virtue, what do I see? I see person's volume indicator is heading up. The histogram is heading up. I just broke through resistance with a new person buy signal, so that makes it a trilogy buy, I believe. It's in a weekly buy. Weekly volume is strong. Weekly histogram is strong. I like it. Am I upset that the person market catcher is coming down? Not really, because I look at the high, and my hope would be that if I get a higher high, the I get a higher high on the catcher, but I'm nowhere close to that. If I want to look at my Q signals, just to make sure it's not in a bad place, it turned blue, so I believe that's a go with flow buy. Broke above trendline resistance here. Nothing immediately overhead of resistance. The weeklies over here. I like this. Just make sure I turn something on and I don't have a Kelly cycle signal going the wrong direction here. I don't think I did. All right, there's not enough data. All right, so to me, that's a very compelling story. If I was interested in buying this and going long in this market, I'm not saying I'm interested in buying it, but if I was, it closed at 22.79. The high was 22.92. So I'd probably put a buy stop say at 22.95. And I think I'm going to find the problem with this in 1 second. Where would I put my stop? Wow, my chandelier is here. That's probably not enough. Right there is the lowest in 4 days, and that's 20.25. Yeah, here's why you can't take the trade. 25. That is like $2.70. That's probably about a 14% risk. Too much, so I can't take that one as my stop. So I'm going to look at it a little bit more and see if there's any other stops that make sense. Oh, stop that, Jeffrey. Get off of the box. Got that. Oh, dummy. So I might look here and say, how about right here? 21.50. All right, so I'm going to put my stop. What's the low price on this day? The low was 21.22. The chandelier stop is where? 22. I'm going to put my stop at 21.25. And then let's think about that. So I'm risking $1.70, not much more than 8%. That is the trade that I would look at taking. Since we are in a tough market, I would set my, whatever this range is, gosh darn it. Whatever that range is, I would set that here as well. And then I would have my target one over here. The way I would manage this trade is I would take half off at target one, raise my stop up here to break even, and then trail it the rest of the way. This is, as I look through stocks this weekend, I was more interested on the short side, but if I had to pick something to the downside, that was one that I liked. This is an expensive stock, Biorad Labs. It broke out on Friday, mobile breakout from a squeeze, new person buy signal, kahuna the day before. And again, the same story. Price lower, PMC bullish convergence. This is in the testing world. It's an expensive stock, $300 plus. It would have to be an option play for me and for most, I suspect. And then I had a couple of consumer packaged foods, General Mills, Conagra, Campbell Soup, Smucker's I showed you, and the gold. This is a tough market. The best way to play it, if you can't go short and you agree that the market's going lower, is to look at contra ETFs. And let's just look at a couple of them. This is FAZ. FAZ goes up when financials go down. It's in a weekly bongo up. You know, it's pulled back a lot. I wouldn't buy it until it cleared perhaps in this area at the minimum. But FAZ, you saw what it did. Well, maybe you didn't see what it did, so let me tell you what it did. I played this early on, and from the bottom to the top, in the market sell-off, it was up 222%. Okay. TZA, small cap, from the bottom to the top, it was up 228%. Notice it had a person buy signal there. It's got a person buy signal there. Short the Dow, from the bottom to the top, 174%. Doesn't have a buy signal yet. SPXU, from the bottom to the top, 150%. Doesn't have a buy signal. Those are some of the things that I look at playing if this market continues to go down. Cash is also a very good thing to be in. I just want to go back into my Major Markets Plus because I skipped some things I like to typically look at. So I just want to end this by quickly looking at the dollar. Again, it moved up this week. Thought it doesn't move a lot typically. It moved up 2.4% in 5 days. That's a pretty impressive move for the dollar. The VIX, talked about that it's come down quite a bit, but it's nowhere close. All right, clearly its trend is down. There's no question about that. But a break of this trend line to the upside, and I might be thinking about those shorts. And then gold and gold miners. Gold has been stronger, had a decent week here, sideways week. Remember, bad market. Gold miners starting to get perky, up off their lows, still have to clear some major moving averages. And then silver looks worse than the gold miners. Down there. And then lastly, U.S. oil. Small bounce. So, in summary, if I was a betting person, I'm betting that the market goes down and at the minimum retests. I also believe that a retest doesn't mean it can't go further lower. Although I'm interested in Virtue Financial, I'll let the market dictate what I do. I do realize it's been going up even with the market going down. I already have some of those contra ETFs, and I will take more of them if the market goes down. I have very few long positions left, and most of those are protected by puts. We are ending the earnings season, which has been awful, and begin the next one later in the month. That means in April, you got Netflix, Facebook, Apple, Microsoft, Google, Amazon, and others. It will be very interesting for me to see how the market responds to those earnings. You would expect Amazon to have knocked the ball out of the park based upon volume, same as Walmart, but you don't know. I believe personally that the market is discounting April and at most May right now from an economic recovery. If we go into May and they extend another 30 days, so that the recovery doesn't occur until June or July on the economics, we're going to get worse. And from a COVID perspective, if we start seeing good news, less deaths, less cases, going on the right side of the curve, that might be enough for the market to turn up even before the economics. The market discounts. The market fell before the economy dropped. The market will go up before the economy recovers. But it's going to take some good news from COVID. Right now I'm bearish, but I watch the market closely. Being in cash is a wonderful thing, and have a great night. Goodbye.